Hello traders, good morning, Vladimir here, and this is the weekly forecast for the first week of August 2016. Well, the week officially about to begin and the month officially about to begin, and this is normally the month of vacation. As you know, summertime, a lot of traders are off for vacations, volumes drop down seriously. So it's time to take things more easy and to remember that very likely, of course, there is no guarantee for that, but very likely things will get slower. Normally, on August, things go slower. Of course, there were August months that we saw a lot of movements, but as an average, August is very quiet month, and we have to remember that. Now, this week is going to be very, very busy fundamentally. And if we take a look here on the list of the events, then, well, it starts quiet pretty much with the manufacturing PMI in China, which could affect the Pacific pairs, but it's getting more and more interesting by Monday night, between Monday to Tuesday. We have trade balance and building approvals in Australia, and that's a warming up for the cash rate to come right after that. And Australia, according to the expectations, is expected to cut the rate by 0.5%. There will be also inflation expectation in New Zealand, and then Wednesday warming up all the way for Thursday. We have the official cash rate in Britain, which also expected to cut by 25 basic points. Will be interesting to see what will happen with the pound if the Central Bank of England will not cut the rates, which also could happen. Karen said that he's not going to rush to cut until he will see what the kind of right politician actually do. Politician did not do nothing as for now, so that's not a guarantee. The Draghi, that Karen, sorry, will do or not do an action in UK. According to expectation, there will be cut, but if not, there is a big chance that the pound will make a flat to the upside. And on Friday, we have the cherry, the non-farm payrolls event, and after bad news from the GDP in USA last Friday, it will be very interesting to see what the job market does, because from the last meeting of the Federal Reserve, they were proud to say great numbers, right? The growth and everything, and also the job market. It will be very interesting to see if it's stable or not. So let's go over the charts and let's see our opportunities the way we have them. Let's start with the Aussie kiwi, which could turn to be a monster. Now, my long-term view was and remained bullish. You remember my analysis here? That was the special cycle we were dealing with. The thing is, what's going to happen from here? We've had a divergence, so there are two options that this pair is going to actually act on right now. We had move down to move up, sorry, to down, and this could turn to be the retrace all the way back to the middle of the entire movement. But on the second view, we had one false break here, false break, like broke down and retrace up, one false break up here, attempt to break up and retrace down. That could turn to be a range as well. So there are two ways the pair is going to act. One, it already found the bottom here, and this is very reasonable because it looks like we are building a head and shoulders, which means the shoulder might hold the entire line. We can see from the history that it's also a monster support area. So 105 is really, really massive zone. But the question is what's going to happen actually with Australia and their rate cut, and how New Zealand will follow. So that's basically what we have to remember. If we break through 105, 104, there is a very big chance we are after 103, maybe even one more low, new low, before we retrace all the way up again towards 110, 113 area, the big range here. So that there is a very big chance for that, and there is a chance even we see a parity level, one clear one. If we take a look here on this view, okay, so the 61.8 is waiting us right there, so we can spike through this area, found some bottom before we retrace. So we have to be very, very careful here, and that's the, if we drop lower to lower time frames, we have to actually see how this affects. Now, what might happen here is huge turnaround with the break above the trend line, but it's very, very, very important we do that after the news to come on the beginning of the week. Okay, so if it turns, it will be perfect. We can jump and hold the buys. If we are not, and we are just about to break lower, then it will be much, much, much more clever to let it go and wait for the next opportunity, which could be, as I said, 103, maybe even lower, closer to parity level. That's also doable. For me, it's anyway, for long run only buys, but on short run, if the news will not be very supportive for that pair, there is a chance we would go and short term look to sell. Again, for long run, I have no doubt there will be massive buys. The only question is where from, and if it holds, we might go for sell if the news really support it. So we will be very smart at the beginning of the week with Monday and Tuesday. Next pair I want to talk about. First, this is the main opportunity as I see that, because we could have a really good move here, so keep an eye. Now let's take a look on the other pairs. Pound dollar finally broke the pattern. Sorry, let's do it 4-hour chart. It's much clearer there. Broke the pattern as we want, right? But we can see that the pair really suffers from gaining the momentum. So we know that on Thursday there will be a rate decision there as well. So if there will be cut, there is a pretty good chance that all this breakout was fake and this turned to be just a flat move right here before some continuation down, and maybe according to the weekly time frame and the weekly cycle, one more low around 125 or even lower until we create some bullish divergence like this on the weekly chart. Okay, so that's doable. Now we have to keep an eye and see what actually about to come on Thursday. Now, if there will be no cut, then there is a very serious chance that the pound dollar is after 136 plus to close this gap, which actually makes sense because that's where two waves could complete itself, maybe even a bit higher before we continue lower, because we all still remember how sensitive is the situation in Britain. And that's about the pound dollar. We have to watch how we get out of this range, which seems like turned to be a range. Now, those of you who did long, for example, on this retrace or with the breakout the beginning of the week, right, on this retrace, for example, then hold your positions. You can break even risk-free, right, and let it work. If kicks on break even, okay, we will be looking for opportunities after we know the news. If it holds and rallies, that could be really good chance to enjoy from a very, very profitable move. That's an idea for the pound dollar. So the zones of actions are going to be actually, let's mark it a bit bigger here so it's more visible. Now, with the false breaks up and false break down and the lack of momentum with the breakout of the wedge, this is the place. Our zone of actions are going to be above the range or below the range after the news we publish will be published, and this what will let us know if we are after this or after this. Okay, so keep an eye. This is a very good opportunity. As I said, those of you who did long with the breakout like this, okay, in this place, you are risk-free, guys. It's a really nice move, nothing to worry about, right? That's basically all the idea here. Euro dollar is the a very interesting surprise, I would say, from one side, and not surprise from another side. Last week, as you remember, we have been talking about the possibility of this turn to be a triple, which it did. And if you remember, we were talking about this divergence. We said once it completes with the retrace and the break of this trend line, last trend line here, game over, back to bulls. And this is what happened. Now, if you can see, euro dollar gaining, come on, euro dollar gaining some momentum here with some convergence. It's on a correction cycle, and I want to remind you the big picture here. Okay, we had on the monthly chart 2 waves down. We had this, and this. We had some kind of divergence, which normally is not perfect and very likely would provide us one more low. But before it does, there is a chance we are now in a ranging mode, which could be like this, and like this, and like this. That's the scenarios we have. So euro to rally, basically, and technically, is an amazing thing to happen right now. Okay, so if there will be no surprise, and technically we hold it well. We had triple cycle here, right? We had double cycle correction. So this turned to be a triple double. We have it mirrored, kind of mirrored itself. Now, that's a very positive thing for the bulls. We have a convergence right now, so stay long. That's what I'm trying to say. If you took this long with the breakout and after the daily divergence, stay long, and let try to catch the move. I mean that there is a serious chance we are after 113, maybe even all the way to the top again 115, and maybe even, believe it or not, and I know it sounds not reasonable right now, but there is a pretty serious chance, if we take into consideration 1, 2, 3 triple movement down, that we are after we have duplication area in 118, and maybe, and I know it sounds total nuts right now, but maybe we are going even to 125. Is that possible and doable at all? Well, if we take a look on a trend line, the answer will be, Now, as I said, fundamentally, I'm under big doubts. We all know how bad the situation in Europe is. So the higher we climb, the stronger the sell is. But, and here is what I want you to pay attention to. There is currently, it could change any moment, but there is currently no bearish divergence on weekly and on daily and on 4 hour or anything like that. Now, on daily, we do have a trend line right here. That's slightly higher, like 112.50, 113. Maybe there, this will turn to be a bearish hidden divergence, but for that we need a 4 hour chart to create divergence as well, which is currently not there yet. So we have to see what and how it behaves. I still under the opinion, the higher we climb, the stronger the sell we could take, because Eurozone cannot allow itself a very strong euro. Mr. Draghi must intervene if it rallies. So that's why for long run, my view did not change and will not change. It is a massive sell rally. Question is how far we can have this rally. Now, as I said, there is a chance that we are in a range right now, which could mean we are doing something like that, and from here we are going for one more bottom. That's very, very, very doable. Okay, so we need to pay close attention for the short-term divergences like the daily and the 4 hour chart combinations, and once they combine a bearish divergence, hidden or regular or continuing on both time frames, that's time to get off the buys and look to switch for sells. Okay, so keep an eye here, guys, and that leads me to Mr. Euro Pound, which is still ranging, slightly climbing to the very good zones, but we have to be careful here. Technically, we have classical two scenarios. One, we had a correction here, and this is the place where I expect one more low to 08130. Very doable. But there is a very serious chance that we are after 088 right now for a duplication of this until some new divergence will recreate itself. So how we are going actually to trade it? Now, we are long as this trend line holds, and basically as long as we did not get some kind of scenario like this. Let me show you what do I mean. Like false break and momentumal break, and then we can versus this stop right here, protected with stop loss. We can versus the stop look to sell rallies, aiming the move down to 081.30. A lot of things would be decided on this Thursday with the cash decision in Britain. So until then, I suggest to play safe on maybe just the intraday moves, nothing really more. We have to be safe here. Okay, we have to remember the risks that it takes to trade such opportunities. Okay, guys, so we remember that. Now we have the next opportunities coming on the list, and let's talk about New Zealandian dollar. Last week we've been talking about longs, the false break right here, and we gotta move up. Now the question is how long that's going to be. My view was and remains same. We are in a potential sell zone that could start from this top, that could go through 08, 075, 076, but we are after sales opportunities. Now, you remember that this is a range. We've been talking about all the false breaks, right? This false break and this false break, and then we had one on the bottom. So basically, there is a pretty serious chance that the New Zealandian dollar, if climbed to the top, is going to face one more move down. And maybe this time this move would be very deep. So, saying that, we need to drop to 4-hour chart, and we need to start to look for the opportunity where the daily will top and the 4-hour would create a divergence. As long as it didn't, we are after longs. Now, there is no divergence here on the 4-hour chart really created, which means that we have a trend line and we have this bottom right here. As long as it holds, we can go long, aiming again the top of the previous range of this big range from daily, or maybe even new high. Okay, so we are looking for a pullback here and some good risk reward opportunity for at least 1 to 2. Of course, we're looking for ideal like 1 to 3 or more, and this is how we can improve the risk reward. If we take a look on the 1-hour chart, for example, or even lower for intraday, we can look for these kind of things: drop down, false break, and break above the last high again, then pull back and buys. This would allow us to risk very little, something like 40 pips or 50 pips, in order to try and gain something like 200 pips. Right? You understand the risk reward. And this is the opportunities I'm talking about. That's where we have to be, and that's what we have to look for, guys. So that really could turn to be amazing opportunity. Aussie dollar also boosted up, holding the trend line, making the bullish hidden divergence, and yet under chance that this is a potential range. We had a 2 false break in a row here as well, and we have kind of triangle here. So if it's false break and they cut the rate, there is a chance we are after something like that right after that. And we have to pay attention for that. It could turn to be a massive opportunity. If they don't cut the rate, then prepare yourself for a rally that will take us all the way to here. And why to here? Because if we take a look on the monthly chart, we should remember we've had a double cycle here, right? Which could actually also be called a special cycle. So it doesn't matter really how we turn it around. We put the lines and we can see that we have the 38.2 and the 50. Well, it's all about 0.74. That could be a monster buy if they don't cut the rate. Okay, expect to buy any retrace up, and that could be even fast because it's in between Monday to Tuesday, right? That could be something like boom, boom, and fly. So be ready here. And that brings me to another great opportunity with Australian. That's Aussie versus the yen, which I love a lot. And here is why. Weekly chart created for us this special cycle which is amazing, if you ask me. It could be called triple as well. I don't care how you name it, I just care how you treat it. We had a bullish divergence here. We had also this cycle, if you remember, guys, this big one, right? This biggie, which blocked us on the 161. That was a monster. So as long as this monster is on, there is a very serious chance that we are after longs, and we should reach somewhere to here. A lot of pips to go. On the daily chart, we actually had a false break to the upside after the bullish divergence here, a bullish divergence and a false break. So we remain under bullish pressure. Now, if we take a look here, the pair did not gain the momentum, which means we still should look to buy the bottoms. The question is where this bottom is going to be. Dollar yen is dropping down after a disappointment from the Bank of Japan last week, and I will talk about it in a few minutes. Australia expected to cut the rates. But we are talking about possibly 76, 75, maybe even 74. But we are after buys. So what I suggest is look for this bullish hidden divergence to form. Okay? Higher lows on the chart, lower lows on the histogram. Look on the 4-hour chart to combine a divergence as well. So we need basically something like that. Bullish divergence. Bullish divergence. And then we can go and switch for buys. So what we need, boom, 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 lows to create divergence and rally. If we don't get it like this, we have to confirm it with the break of this trend line, because then we can jump in, rally, retrace, and up. And to do that, we have to wait after the news and see what is decided in Australia in terms of cash rate and future calls. So we have to pay attention for that. Really good opportunity, and I start to love it big time. Now let's talk about the yen pairs, which are monsters as well. Let's take a look on the dollar yen. Dollar yen dropped lower big time, and all that just because of the disappointment of the central bank in Japan. How ridiculous that could sound. Just imagine, guys, the bank took a step, but the investors so disappointed by lack of real activity, which actually take the yen into another strands and dollar yen to the downside. So it brings me back to my expectations from, well, you heard me saying not once in the past, talking about 97, 95 or so, until this divergence created. So we have to remember we had one false break right here and another false break right here. So that could bring us into kind of a range which could go like this easily, which means theoretically there is more to go. So those of you who are short, hold it. Those of you who are not, the way to do that will be trade versus the last trend line. We have this and we have this. If we get closer, we can look for a sell opportunity. So for that we need like pull back and a few waves and a breakout down. Then we can go and trade the sells. We will be looking for the last bottom around the 100, of course, and then for new lows around 97 or maybe even lower. Who knows? So that's really good opportunities. And remember, just look for risk reward. So our sell zone, sell action for this one starts from 103.50 ish and goes through 104.50. So this is our action zone basically, even a bit below the 103.30. That's where we will be looking for action. Looking for action does not mean if it reaches sell. No. Look for retraces down followed by bearish signs like bearish divergence, for example, or breakout down of a trend line, support levels, and that's what could provide you the sell signal. One of the most common mistakes trader can do is just blindly jump in expecting things to happen. That could be risky. And that affect, of course, all the yen pairs, the euro yen, which also could continue and make it lower. According to the technical signs, you remember, euro yen has all the reason to take us to 103. I know it sounds ridiculous, but it's doable. So same story. Stay short. This is the trend line to follow. If we get a trend line and tops, of course. If we get closer, we have to look for breakouts. Don't just blindly jump in. Okay, trend lines, breakouts or support breakouts. So this is what we have to follow. Remember, it's all about risk reward. If you can risk small get big, that's where you will want to be. Pound yen, same story, especially if it takes into consideration also what happens in Britain this week. If they will cut, pound yen could make a massive move because according to all the cycles, especially the monthly, we are after this low or maybe even new low to be reached. Okay, just to continue to move in this one big range in here. No signs for divergences nowhere, so we have to be careful unless the pound will not cut the rate, and then we can go. Sorry, let's mark this line. Okay, and then we can go longs with the breakout and retraces, so something like that for duplication of this. So that's the two things we have to follow after the news, of course. So we have to patiently wait for the opportunity. Let's take a look on where is this one? Pound franc, which I start to find amazing opportunity. And here is why. Weekly, about to make a double wave. But we don't have divergence yet, so one more low is definitely possible scenario to happen. Daily had this cycle as well, and maybe one more, last one more leg. So anything around 125 and lower would be a monster opportunity. But here is the thing: it did not ever correct in two waves after this vertical move. So what could happen here, pretty easy, is that we have this trend line and to create right itself like this, boom, 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 boom. And after the news, if the pound will not cut the rate, make the second push up before it turns down all the way again. So I know it sounds currently tricky, and that's why I say we are not going to attack right now. We are after the news, and everything would be decided by the call. What's coming this month and what's to come on soon future. So we have to wait and see what central bank will tell us about these scenarios. Eurocard is a good opportunity for a possible long on a short term. Since we gain some momentum here, we can see that we have a trend line right here developing, right? And right here developing. So basically get closer could provide us one more rally before, according to the weekly or monthly charts, one more potential low to below 140, which is also doable. So how can we and should we trade anything like that? We mark the trend lines we have. We have one here, and we have one bit lower, the one that comes from the daily chart, you remember. So this is our action zone right here. The best thing to do, of course, would be to look to get this drop and buy. But to improve the risk reward, the best thing would be actually to get something like this. False break, break above the last high to gain momentum, pull back, and try to join the rally, aiming approximately around 150. Could be slightly lower, slightly higher, but this is basically the zone. So we will want to see some action area next to here, 145 and lower through 144 approximately. That's where we will want to see these opportunities. So that's all. Keep an eye, guys. That's where I expect an action and continuation to the rally, which takes me back to dollar Canadian. And this beast actually did drop from the levels we have been talking about on many last of many times last few weeks. You heard me not once talking about this area. Those of you who are in and took action with the breakouts, hold yourselves. There is a pretty serious chance we are after reversal and continuation. Okay, but for that we will be ideally breaking below these lows. If we can get it, that's a massive call for continuation to 123 or so. If it doesn't and make the retrace, then and only then we can say there is a chance we are to climb to 135, 136 before the next move actually happens. So we need to go below this low around of 128.50 approximately. We have to break it down, we have to gain momentum, retrace, and then we can talk about all the way sell. Those of you who are sell, just hold your position. You can partial close if you would like, of course, to make some money. And hold the rest, or just break even itself and free the risk from the trade. And then you'll be, of course, risk free, which uh, is the best place to be in, right? Risk free and the chance to gain big time. That's where we will want to be for sure. So let's see where we go from here. Where's the spare? We have, as I said, two opportunities. One, the break below 128.50, retrace and sell. Two, we are about to see the trend line hold, retrace, break out the trend line, and continuation to 135, 136. Play it safe. Don't rush to make any call here. Next opportunity on the list I have. Okay, let's talk about gold and silver. Is that the end, or are we going higher? Guys, technically, as I said not once, gold has all the reasons to climb above 1400. Are we in a rally from here, or are we, first of all, for one more low from here or from here? I'm more like for the second opportunity for some reason. I believe there will be a retrace down. And for that to happen, I would want to see the breakout of the trend line and again momentum below this low. If it happens, sell rallies would be the plan. For short term, of course, because for long run, I still expect only buys. I will want to see one more dip and then go for a buy. And that brings me to silver, which I want to see exactly the same scenario happen. And for that to happen, I would like to see the trend line breakout, momentumal breakout, retrace, and continuation down. And before we join again to the buyers, I want to see two waves in order to jump in, something like that, and maybe back to trendline by ideal and rallies. That would be really amazing opportunity. That's what I will want to see. And if we just break above the last highs, that we'll have to value the new opportunities, because currently it's more bearish than bullish to me. Oil, get ready, guys. Oil is coming to its bottom, and I don't think it. First of all, it might happen here, but I believe it will be happen lower, like 39, 38 area, approximately. From there, look for buys. Finally, the buys we wanted, right? Trend line, the last trend line to be created. No idea where it's going to be. Like if this one holds, then move, breakout, retrace, and go with the buys. That's exactly the same as we've been talking about for last couple of weeks, so nothing new here. Indices, S&P tries to break above last high here, which is technically reasonable. It still could play around 2200 approximately, slightly above, slightly below, but it could also turn to be sudden false break and a crash. So only question of time is where the bears take control, and that's why, as I said, for me it's only for sell opportunities, not going to look any buys here. German DAX, we have this line on the 161.8, and we have this cycle on the 61.8. So we are, oh sorry, like this, we are on a massive area. And in order to jump in for a sell here, I want to see break of the trend lines, and basically I would like to see some momentumal gain. Currently the last important move stands right here, and we didn't have any false break on this place. So I want to see this false break complete, gain momentum below this low, pulling back, and then we can go for a sell. Our targets in this scenario would be actually 38.2 and 50 of these two cycles. So it's pretty serious down move could happen if we actually gain momentum. And if not, then we are after that double wave correction here, which could be just a bit deeper yet, like this. Okay, we had double. We might have one more double before one more push down. So keep an eye here. That's really nice opportunities. So we have a lot of things to follow this week, guys. Sorry it took me long this week, but I just wanted to share with you all the opportunities as I see them, and there are many, as you can see. Patience is required because not everywhere we are ready for action right now. There are pairs for action right now, as you saw, but there are pairs also that we have to wait a bit, to see clearer scenarios. So that would be all for this week. Thank you very much for the time dedicated and for watching this video. Don't forget to hit the like button if you like the video, and feel free to share with anyone who you believe can enjoy from these opportunities and have some benefit by watching this video. If you have any question about any specific pair or any other opportunities, share your comment, question, feedback, whatever you have, guys, on the comments place, and I'll be very thankful for that, of course. And that's all. I wish you a wonderful week, great trading, and I hope you have a wonderful weekend and rest a lot. Stay safe, and I'll see you soon. Yours, Vladimir Ribakov.